Hey guys, thanks for tuning in today. It's been a while since we've had a PayPal supposed monthly, but here we are. It's probably been about 3 months. So, what we're going to do today is we will look deeply into PayPal over the next hour or so. All the bearish news, I think we'll start there, just because that's been the biggest cause of drawdown and consternation for a lot of its shareholders. It's been painful, not fun at all. We'll look at some bullish news as well, some innovation that's further out, and of course, quarter two. This isn't going to really be a quarter two earnings prediction, but we'll talk about quarter two for sure. Let me retweet real quick that I just went live. All right. All right. And we're going to start there. And by the way, post your questions in the comments. If it's not related to PayPal, I may not get to it. But as always, thank you guys for tuning in. So, as far as the first piece of bearish news, stablecoin, of course, has been all the rage as far as a topic over the last really 2.5 months or so. Something that surprised a lot of people, but frankly, there's a lot of us, myself included, that labeled this year as the year of stablecoin. And there was a lot of obvious tells. I mean, some of it was a technology where there was that, but mostly it was the regulation and the regulatory piece that we'd gotten to the point where the United States government, the SEC, was in the mode of stop everything crypto under President Biden. And when Gary Gensler was ousted, of course, Donald Trump mentioned and said, hey, we're going to make stablecoin, or crypto rather, and AI, basically their two driving initiatives. And they've acted like it. And there's some reason for that. Stablecoin itself continues US dollar dominance. It also has massive implications on the 3-month treasury yield, which is good for the United States government as well, and saves a lot of consumers money. So, but there were some very bearish, and thank you for the birthday greetings, guys. We having a good birthday weekend and everything. Yeah, this right here. Patience and accumulate now. I will be adding on Monday. My position is just because of price action on other stocks going up and PayPal going down, it's under allocated to where I'd like it to be, but it's for bad reasons, just because the stock has been really, really rough. And actually, let's start there too. I'll pull up PayPal here year to date. Let's take a look. This has been a painful hold. It's been an opportunity cost for sure, and we only know that really in hindsight. But I mean, it has been to this point. I think that there are real indicators that we're going to see a turnaround here in the next 6 months. Not so much in the company, we're already seeing that, but in the actual stock price. I don't know that it'll be quarter two, although there are some really bullish things that the market is sleeping on about quarter two. But I think quarter three and quarter four are going to be like massive, massive surprises. So let me share this right here. All right, and I think it's hiding my holdings. So if you see it, anyway, 1 year we're only up by 18.4%, which is not amazing. Let's add the S&P 500 right here, and you'll see S&P 500 is up 11%. So it's not terrible. But when you add things like, I'm not even going to do Robinhood because it's utterly ridiculous. But let's just add. Well, I don't know actually how Visa is doing, but let's just do Amazon. Amazon, hasn't had like an insane year. But if we look at year to date, PayPal is actually down 17%, while we have the S&P 500 up 6.67, Amazon up 2%. Over 3 months, it's been up a little bit just because everything is because of the April bottom. Over the last month, it's been down. This week has been painful. I mean, 5 years out, which very few of us were investing then, incredibly painful. Like, just, yeah. So would like to see that change. And I'm not just in a like hope and pray and hope that it works out. I'm seeing fundamental reasons why it's very exciting to be a PayPal investor. So where do I see PayPal by the end of the year? If what I'm thinking as far as the market is right, I don't know that it'll really appreciate quarter two earnings, just because right now the market is in the mode of prioritizing top line revenue growth, and it doesn't care much about EPS, at least in the short term. It's not to the extreme as it was in 2021, but top line revenue growth will not be there for PayPal in quarter two. They'll have probably 3% revenue growth, but we're going to see maybe 5 or 6% revenue growth in quarter three, and 8 to 10% in quarter four. And a lot of that's because of Braintree's margin shift and some other things that we'll cover here too. But anyway, with that happening, with guidance, and with them actually being able to raise guidance, with a lot of other factors as well, I think that towards the end of the year, the market will realize, okay, yeah, PayPal is actually positioned very well. It's not going away. They're actually getting stronger. They have a compelling case. And so it's not going to be like the most exciting return, but I could see PayPal between 120 and 140 by the end of the year. Now that's a double. That's great. But a lot of that is it sold off massively. I mean, it was 90, I think, at the beginning of this year. So that's not a massive increase on a 1 year basis. But when do I expect PayPal will have a quarter that shifts the sentiment of Wall Street? Quarter three, I think, is the beginning of that shift. Quarter two, I think, will be a little bit, but again, for whatever reason, the market doesn't care about anything else. Mostly, I think actually it will care about guidance. Well, let me back up. Earnings season just began. Delta Airlines reported this last week. Has nothing to do with PayPal, except Delta, like many other companies, actually said, "Hey, we're not going to give any guidance at all the previous quarter, just because of tariff stuff," and they've reissued full year guidance. And so they had a little beat. It was nice, but them reissuing that full year guidance spiked Delta and a whole bunch of other airlines as well. So if the market, and you need to pay attention to this over the next 2 weeks, if the market seems like it's actually prioritizing in terms of earnings guidance, PayPal is actually positioned incredibly well because, again, they did not raise guidance at all. They wanted to. You could see that from comments from Alex Chris, Jamie Miller as well. And there's a lot that they've not baked into guidance at all. They actually were factoring in. Jamie had this during a fireside chat with Bernstein, I believe, indicating that they had built into their guidance a 2 to 3% e-commerce slowdown year over year, not just for PayPal, but industry-wide, just in case due to recession or consumer weakness. And we're not seeing that weakness. We're actually seeing the opposite. So if the market is prioritizing in terms of earnings guidance, and that's the most important thing, then it could be this quarter. If not, I think quarter three, we see some, and quarter four, we see quite a bit as they begin to accelerate close to double digits, which is not the most important thing, but revenue growth, it is important since it is certainly a factor. So as far as the bearish stuff, and I see a couple other questions here too, real quick, just to give an overview of what happened. So USDC, since it's year of stablecoin, they are positioned very well, and I actually hope that they become the most dominant token, even above PayPal's own token. No shade on PayPal, but these guys are everywhere, and they're a lot better for consumers and users than Tether. Tether is still pretty sketchy. PayPal, if you look at market cap size as far as PayUSD, it's around number 10, but a lot of those are not really in circulation. They're held by like 75% by like one person, or they're just used on a single platform. They're not really built for this. So really, PayPal is probably the number 3 or number 4 token, depending on how you look at it. Anyway, what they launched is a payment by crypto. This is just one of many. This is their white paper, which is actually worth a look. And this actually caused PayPal to spike down. Like pretty much any news these days, for whatever reason, the stock is so weak. Any good news, it goes up a little bit. Any bad news, it spikes down 5%, just instantly, whether it's deserved or not. And here, I mean, it's never good to have additional competition, but in the reality, PayPal has their own stablecoin. They're leveraged very, very well to implement it. They've been behind of what I thought that they should be. Frankly, that's one of the things. I don't have blinders when it comes to PayPal, or at least I don't think I do. But so this caused a lot of ripples, and even Visa and MasterCard were slammed that day. There's a lot of payment processors too, not just PayPal. And then this came out. Walmart and Amazon basically said, and it's funny that this headline is dumb, made a surprising move no one saw coming. In essence, they're looking at issuing their own stable coin and using that for consumers. USDC and Circle's product, it will get some use, and over time that will build up. And it's more compelling for cross-border. Walmart and Amazon, it's somewhat compelling. And Amazon, though, they handle most of their own payment processing. So it's really a headwind against Adyen. PayPal doesn't have a lot of volume there. Walmart, not as much. And the consumer right now doesn't really have a vested interest to use stablecoin. That can be given, but the disadvantage for Walmart and Amazon is there's laws in the books that actually prevent retail like this to actually become their own bank. And the way that, at least in the past, that offering any kind of yield has been defined as a bank-like activity, which Walmart and Amazon cannot offer. So they can offer their own tokens, but I mean, it's not going to be what Amazon and Walmart think that it might be. What this really is, though, is every company should be looking into ways to save some margin. And this could be a negotiating lever, especially against Visa and MasterCard. And the thing that a lot of people are not understanding, just real quickly, this is how a typical payment works. This is a great article, by the way, by Simon Taylor called, let me go up, just Stablecoins Aren't Cheaper, They're Better. Came out in January. He's great. Just looking at different fees and the expenses and everything. Like realistically, you can see it's not that much cheaper, depending on several factors, to actually move things over crypto rails, except if it's in a cross-border context. But it is better because it's programmable, it's instant, it's trackable. So here's a typical $100 credit card purchase. It goes to a store, $100 charge, then goes to the payment service processor, which is like PayPal, for instance, which goes to the merchant acquirer. Visa gets their take because of their rails, and the issuer takes $2.10 as an interchange fee, and it goes back to the merchant. They get $96.80. So what would be the issue to just do all this in stablecoin? Well, you would not have any sort of fraud prevention. You wouldn't really have consumer protections. You wouldn't have, an issuer. This is a big piece of it. Basically making sure the person actually has the money. So there's a whole host of issues. You can save some money here, but honestly, it's not the savings except for under cross-border that a lot of people expect. So that was the main piece of bearishness. Now, recently here, yesterday, the drop, at first I was like, okay, why is PayPal dropping? I'm not seeing any news. A lot of payments companies dropped. PayPal dropped the most, which is really weird, but it dropped, 5.5, almost 6%. And basically it's JP Morgan Chase taking advantage of this. The CFPB basically issued a rule, 1033, which actually supposedly went into effect in January, that heightened consumer protection as it related to their own data with bank institutions. What this meant is that myself, I could go out to my bank and say, hey, I want my data. They'd give me my data. I could also go to my bank and say, I want to give so-and-so. So Robinhood, SoFi Relay, PayPal, Visa, access to my bank account. And they'd have to do it free of charge. They could not charge for that. I could also remove myself from being advertised upon for my own data if I wanted to. The CFPB actually said, hey, we think that we've exceeded bounds. Now, they were actually sued at the end of the year, but really new administration is shifting a lot of regulatory stuff. And so now they're vacating this rule, which now allows banks to begin, once it's vacated, it's inevitable at this point, honestly. I think it will be replaced by something, but there will probably be a lag time of 6 to 12 months, perhaps, as regulators actually look at something that is maybe an in-between rule. But what this means is JP Morgan Chase is going to charge for data access. Now, at the time, I was like, well, what data access does PayPal need? And really, it's API access. It's for PayPal, like if they're paying with a JP Morgan Chase card or a bank account, they need to be able to access and see that the customer is good for it and that they're a real customer, and then issue that payment. So JP Morgan Chase wants to charge for that. This won't be a massive amount on an individual level, but a lot of transactions can add up. Now, I'm not too concerned with PayPal on this, just because they have so many things that they're doing, and some of that we'll talk about later today, which are really improving margins. And so I think that this will just be a blip on the radar, honestly. Now, other banks, if this isn't pushed back on, are going to join this. Wells Fargo, Bank of America, large banks as well. What this really is death for a lot of smaller fintechs. It's a lot of pain for Plaid, which is that go-between for a lot of fintech type companies. And it really kills open banking and pay by banking, which the later pay by bank, that being dead, that's actually good for PayPal. But overall, it is a little bit bearish. It's not massively bearish. It didn't warrant a 5 or 6% drawdown. But I mean, that's what the market does with PayPal. Any hint of a bad news, it just sells it off like it's a risky asset for some reason, even though it's not. So those are the main pieces of negative news. Now, there's one other one that came out earlier this week. Of course, we had Amazon Prime Day and picked up a few things, including some cheap Celsius. Peach Vibe is the best flavor. Not my favorite drink, but hey, it was on sale. So, but the headline read Amazon was down 41% year over year in terms of Prime Day. And so, of course, Amazon sold off a little bit and PayPal got hit even harder, along with a lot of payment processors, which was like, does the market not realize how little PayPal actually does as far as processing for Amazon? It's not much. I wish it was more, but it isn't. But the market is stupid on the short term and reactionary, especially towards PayPal. And so it sold it off. Now, the really funny thing is, Amazon stretched out their 2-day Prime Day, which it used to be one back in 2015, to 4 days. Now, it's not a surprise when there's not that short sense of urgency that year over year sales are actually down. And of course, Adobe Analytics came out and they said, well, actually, worldwide e-commerce, not just on Amazon, is up 9% year over year on that day. So 9.9%. So close to 10%, which is really good for PayPal. You wouldn't know it from the stock price action. That's just kind of the month that we've been having. So let me look at some of the comments here. Yes. Yeah. Opportunity cost is a real thing. And I think that going forward, that's the biggest risk with PayPal. It's not that PayPal will, like some people think, and I don't think they understand the technology of stablecoin. They're like, oh, stablecoin will replace everything. Visa, MasterCard, PayPal, they're all done. It's like all three are heavily involved in stablecoin projects. They understand the implications. They're actually ahead of the curve and positioned quite well. But there could be an opportunity cost, and I think that's probably the biggest risk over the next 3 to 6 months. It could take some time for the market to really appreciate what PayPal is doing and building. It seems like what's most important to the market changes depending on the macro and certain conditions. And sadly, if this was PayPal under Dan Schulman, which is just cares about top line revenue growth and all-time highs for customers, which they have again, but in a legitimate way, the market would probably like it a lot better, even though that's really not sustainable, and that would eventually harm PayPal almost irreparably. Do I think Alex Chris was too optimistic early? Yes, he absolutely was. When he came, I think he didn't realize the extent of the damage to PayPal. Now, he, in the second quarter, second real quarter he'd been there, I think it was quarter one, 2024, that's when he started using the word transition year. And really, it's been a transition 2 years. Some of that was to do with just in-house. They didn't have the right culture. They didn't really have a vision. Everything was siloed. Venmo was competing with PayPal, which is like, how does this make sense? Braintree was competing with PayPal. It's like, don't compete with yourself. You have enough competition out there. They basically would acquire companies and just hope for the best and never really integrate them. They would launch products like the stablecoin and just not have a plan. It was terrible mismanagement, just terrible. And there's a reason why every single person except for Frank Keller that was in that C-suite is gone. Alex Chris cleaned house. Now, I think there were some good people that left, but it could have just been that they just needed to move on at that point. So they brought in a really compelling team. But the turnaround has taken longer than probably Alex thought, and also that I thought as well. They laid out the stage really for the rest of the turnaround in Investor Day. And a lot of that has to do with finalizing this Braintree shift. That's the biggest headwind in quarter two. It's a 5% headwind towards top line revenue. That's the largest amount that remains. I think we've actually bottomed in terms of revenue growth. So we'll see probably around 3% revenue growth, which is not amazing. But again, 5% headwind. So it's right around there in the PayPal norms of about 8% growth overall on the top line. Bottom line, they're doing much better. Quarter three, we see a lot of that abate, and that's why we'll see some acceleration. In quarter four, that it's completely abated in a healthy way that they could continue to resume at the 8 to 10% clip. And I think that actually accelerates next year. So yes, he was absolutely too optimistic. And yes, he should not have used shock the world, back then. But I think that the turnaround is mostly complete, that we're about 3/4 of the way done. I think 2 more quarters and the market will probably see it because it becomes obvious. So that is a huge factor. If you're probably not new to PayPal, you guys are all familiar with it, but Dr. Mark Gaither is the head of PayPal ads. And we'll actually bring up some bullish news because it's been bearish so far. Let me pull up this quickly, but Dr. Mark Gaither is the guy who basically was involved with Amazon's retail advertising when it was brand new. He was not the head of it, but he was one of the leads. He brought and actually acquired the first client for them at that time. And of course, then he was tasked by Uber to build from scratch their retail advertising, which rapidly went to a $1 billion annual run rate. It is a different advertising model for both of these and PayPal, but the transaction graph and what they've basically pitched it, I might not be saying it right, but Cannes or Canes in France is really, really compelling and interesting. And it's actually one of those places where they aren't really going to be disrupted as much as a lot of advertisers that are very focused on web-based advertising, because the way that the web is being accessed has changed. And so he had a number of great interviews, but I don't think I'll go into all that, but I'll give one piece here. He was interviewed and asked as far as what the goals were. And he said, well, those internal figures haven't been released, but you've seen my past success with Uber and Amazon. Amazon, by the way, is the largest retail advertiser by far. I think that they own about half of that space. Uber has accelerated faster than any company out there in terms of advertising from zero to where they are right now. So he said, you know what I've done in the past. And so you can think about our goals as similar. And it's like, okay, that's what I was hoping to hear. I'd love to see some actual metrics. Now, this last month, rather, they in Cannes, France, they have a large advertising venture where a lot of different advertisers are out there. And they ended up announcing some really neat partnerships. Let me see if I can find those. And if not, we'll just move on. Yeah, I've got posts on these, but well, this isn't it, but this is the quote that I was thinking of. He said, as far as the goals, you can imagine based on the successes I had in the past, what those internal goals are. This is, by the way, a good listen. But they announced a number of advertising partnerships, which is really what you want to see with some massive omni advertisers. And so those are going to scale, really, especially in Q4, but it's starting to ramp up. They launched offsite ads. They launched on platform ads. They launched UK ads as well. I don't think we're going to see meaningful revenue in Q2, way too early. We'll see some in Q3. I don't know that they'll break it out, but they probably will give us an early read. Q4 is where I think we see meaningful revenue growth. Advertising is really amazing just because it's being disrupted right now. He is a credible head. He's hired some incredible guys as well. They know how to scale this product. And so we'll see some meaningful revenue there. And the best thing is it's maybe not quite to the level of Uber in terms of margin, where basically it's 100% margin for Uber, which is insane. But this is a very high margin product. And I think it can, in the next couple of years, get to that $1 billion annual run rate, which most of that goes directly to that bottom line as far as free cash flow. Technically not transaction margin dollars, but net dollars, which is a pretty substantial increase, even if everything else stayed exactly the same. So if the market wants top line revenue growth, they're going to see a lot of it over the next few years. Thank you. Really appreciate it. That's a fun one. PayPal at 70, SoFi at 7. I'm seeing some people basically say the same thing, that this is not a bad way to take this. SoFi is the most recent example of this. The market will, for a time, just say, no, this company is dumb, it's stupid, it's not going anywhere. People will be saying opportunity cost and you're an idiot for holding. And I certainly feel like one, honestly. I mean, like, feelings are one thing, but I don't let feelings dictate my decisions for me. I let facts do that. And that's the great thing about this long weekend, is I had more time to look into, the JP Morgan stuff and reevaluate things and do this with you guys. This actually helps me think as well. But SoFi was considered dead money, and people were calling for Anthony Noto to be fired, which is ridiculous. SoFi has not had perfect execution, but they've been very good. They were undervalued, and that's one of the reasons why with SoFi, I'm like, hey, this is one of the biggest opportunities over the next 2 years. The loan platform business, student loan lending, as rate cuts continue to come down. Crypto is not, I think, as significant as some people think with SoFi. But, I mean, we see where the stock is. And what happened largely is nothing really changed with the company. A couple things. Macro shifted a bit, especially on student loans with the big, beautiful bill stuff. But what that did is basically shift the narrative. And so a lot of people are looking at SoFi now and they're saying, wow, how amazing this is, just because of price action. And that happened with Robinhood, that happened with Palantir, that happened with HIMS, frankly. I've seen this time and time again. Will PayPal be that again? We'll see. Time will tell. I think it's going to be a slower opportunity, but again, over the next 5 years, I think that there's a very good chance we see an all-time high, especially because the float is so much smaller than it used to be. No, that's actually a good question. So what they baked in for guidance of this year is absolutely nothing from advertising, absolutely nothing from Fastlane, absolutely nothing from any sort of first look project at all. Zero. They will have more than zero, but it is zero. Now, Fastlane is one of those things where they're working on scaling right now, and then they will monetize that. I believe in next year, it might be in the second half of next year as well. But they want to win guest checkout, and to do that first, they're not quite giving it away. They're approaching people saying, "Hey, this is what the product is. We'd like you to use it." They're partnering with a lot of the right people, including J.P. Morgan Chase, by the way, which is doubly ironic. But in Fiserv, it's even Adyen, like people that are normally competitors, they're like, "Hey, we need this solution," and PayPal is leveraged very well with the data, with the understanding of we're giving it away basically right now, but we will monetize this, and this is what that monetization looks like. So there's nothing included, and appropriately so, but there's other products that they're launching and they've been launching, which will ramp and are not built in at all to guidance. And they're also baking in, very few rate cuts. They're also baking in 3% year-over-year decline in e-commerce globally. So they're being very conservative. So yeah, they're going to smash through those numbers. Good afternoon to you all as well. It's the company. Yes, the company has been a great finance play. The stock has been absolutely trash. Usually when the company is and I think is in very good shape in Alex Chris's hands. By the way, so just because of price action, I think, and it has taken a little bit longer than I think even Alex Chris and most of us investors, myself included, had thought. There's some frustration, and people are like, "Fire Alex Chris." If Alex Chris was fired, I would be completely out of PayPal that day. You don't have to look on X. You don't have to look for my video. PayPal would be done at that point. He is visionary. You can see what he did in his time in Intuit. Listen to what he's talking about. He's always ahead of trends. He listens to customers and consumers. He understands that payment is a solved problem that PayPal really needed to diversify into a commerce platform, and that's what they're doing. He identified the issues very early on in PayPal as well. So I think it's a great setup, but opportunity cost is a risk. Right there. Yeah. JP Morgan charging for access. Honestly, yeah, it's walled gardens all over again. In a normal environment, regulators would push back heavy on this, and there may be some antitrust lawsuits actually that come out of this too. But yeah, over the probably next 6 to 12 months, we'll see a lot of this, and so it'll be a little chip against margins. But what they're doing, it more than offsets that. So it's not like amazing news for PayPal. It is a little bit bearish. It didn't warrant the drawdown. Let's see. Total payment volume is looking good. Yes. What's the return potential and time frame for PayPal? Again, I'm looking through 2030. I'm seeing it as a new all-time high, which is like a 5 or 6x from here. It seems impossible, but the way that I looked at that was I think a lot of that doesn't come on the front term. I was saying this, I think a year ago, where I'm like, this is going to take a little while. It may be an opportunity cost over the next year and a half, 2 years. And then at some point where the market realizes what they've built, what they're doing, where they're actually ahead, and as they continue to improve basically all aspects of the business, and those really the big thing at this point is those Braintree headwinds, which are intentional, abate mostly over Q2, but there will be some in Q3. That really helps. Like there's no longer any sort of headwind that PayPal has internally. They're moving all their tech stack over. They're just doing a lot of things right on the back end. And we've seen this actually with another company that the market mostly wrote off as far as a credible investment. That was Walmart. I know you might think Walmart, what's the big deal here? Let me go here and let me pull this up. Just a chart for you guys to see how Walmart has performed. Back in, I believe it was the end of 2023. So I have a son that at the time was working at Walmart, and he mentioned some things which got my attention. A ton of people work there, by the way. I think it's the largest employer. If not, it's one of the largest in the United States. But I was like, okay, there are some really interesting things happening with this company on the back end that a lot of people really aren't realizing. And it actually positions them very, very well in terms of their own e-commerce, in terms of their own tech stack, in terms of automation, just saving a whole lot, even though at the time it didn't look like the most exciting place. So here is Walmart right up here. It's up 36% in the last year. That's not insane. Walmart over this year, it's pretty slow, but you look at it really, actually, if we had zoomed from 2023, it's up substantially, where it basically had bottomed and been written off right here at the end of 2023. It's up massively from that time. So, and the reason why is largely due to this guy. This is who PayPal actually acquired from Walmart. Now, he's not the only person at Walmart that did this, but he was very much involved in that back end. PayPal brought him over, Srini, as the CTO. And Srini has reignited and reinvigorated basically the engineering core and the tech stack as well. With PayPal, you could see that him all over the place as it related to Investor Day. This is their second developer day. I don't know when they had these prior to Alex Chris. I don't know that they did, or if they did, it was not often. They didn't care about developers or developing at all. And so one of the more interesting things that they actually launched is something that he mentioned in this developer day. I need to pull this up as a tab, so let me do that. Let me know if you guys can or cannot hear this.
Let's talk about what's happening in the industry. Take a look at the headlines. People are turning to AI for shopping, grocery planning, and everyday needs. At the same time, we are seeing rapid advancements in technology. Models are getting stronger, reasoning agents are becoming more available, and lots of innovation is happening. But something changed drastically, which is the MCP, Model Context Protocol. It gave us the standardization we needed. Because of this standard, entrepreneurs like you have the ability to create and innovate in many ways. All the advancements are coming together at the right time to make the time for creating this era of agentic commerce. Merchants are looking for a trusted partner to bring them into the era of agentic. This is a new channel, and they want to reach new customers in this way. This is ripe for innovation and opportunity. Consumers love the convenience of discovering and evaluating the products, and at the same time, they want to purchase it with a conversational interface. PayPal is facilitating the agent AI with this important capability, which is to help with the purchase and the post-purchase. We are partnering with large Gen AI players to capitalize on this new demand for merchants. PayPal is the conduit. We enable the trust and relationship between merchants and buyers in the internet era. Trust is becoming crucial again in new ways in the agentic era. Combined with identity, which provides a rich profile of transactions, this helps our merchants personalize their shopping experiences and make it more conversion-oriented and drive demand. We are thinking about more than payments. We want to get into commerce, and we want to revolutionize commerce. And you will do this by creating awesome experiences for our customers and driving demand for our merchants. Over the next 3 days, you'll get to see demos from our large AI partners live for the first time. This room is...
I think I'll pause it right there. There's more to this video. And by the way, you can see, if you're a shareholder, the entire developer day. You can see there's a lot that I have not watched, but there's a lot that I have as well. Actually, more than this. I don't know why it's not showing some of these. What is, in essence, what he's talking about is that partnership that was announced with Perplexity. Perplexity, of course, is growing fairly rapidly. And it's a vector that's a little bit further out, but I think in about 6 months' time, we're going to see a lot more narrative push towards this, towards agentic commerce. Basically, AI agents have already been part of the narrative, but not a driving force as much as I actually would have expected at this point. And a shift that PayPal sees and many others see actually coming is having AI agents do the shopping for you. So in essence, if they have a high level of trust, which needs to happen, and PayPal has that, and good access and understanding to who you are as a consumer, which again, PayPal has that, and also knows trusted merchants, which again, PayPal has 35 million merchants that they partnered with worldwide. Then what you can do basically is you can, in the context with the LLMs, say, okay, what I want to buy is this, or I'm looking at doing this, and it will show you an array of options. It will, be able to pull through Honey any sort of discounts that you're looking for. It'll know your price range, your preferences as far as size, even down to your pants or shoe size, your color preferences, things that you bought in the past as well. And it will be able to suggest, instead of you going through a whole bunch of alternatives, just say, hey, this is likely what you're looking at. Would you like me to order it for you? And you just say yes. And it does the rest for you. Pays through PayPal, ends up probably having you confirm your address just because it needs to do that, just in case. And then it does the rest for you, including tracking, including any sort of issues as far as returns. It handles all of that. And it's done basically in a couple of words. Now, is everybody going to be using that right away? No, but it's something that's certainly going to be growing. What's really interesting is this is done through Model Context Protocol, MCP, which is what he's talking about. MCP is basically the USB-C of AI models. They've been using agent-to-agent A2A quite a bit. And what is a challenge for that, for the most part, is usually there has to be a lot of customization where if I have a certain AI agent that's supposed to do this, that for each and every website, they also need to do on the back end with their APIs, basically preparing for those agents that are coming from me and other people as well. So there's a lot of customization. So MCP is basically like a standard language that allows them to communicate across all these different platforms and agents. And that's done by Anthropic, a partner with PayPal as well. They announced that back in April. At the time, I was like, okay, MCP, I'm not familiar with that. I need to look into that. And I think very few actually were well-versed in that because it's relatively new. If you're in the coding world, you probably knew about it before the rest of us. But as I looked more and more into this, I'm like, okay, this is actually the way that AI agents are going. And it's interesting that PayPal is basically leading here as far as a payments company. They're the first to launch their own MCP remote server. It's there nestled basically in the equivalent of what Anthropic's App Store is. And so you can actually plug and hook directly into that remote server. And I have several engineering friends. I also have a brother that's a software engineer too. One case, I reached out to an engineer and I was like, hey, what do you think about this? And they were shocked that PayPal was involved in MCP. And the other reached out to me and was like, wait, I saw your headline. PayPal is an MCP. We're working on that now. How is this company that's a dinosaur that doesn't innovate anymore involved in this? So it's one of those further out growth vectors, but Srini has brought just a lot of focus and attention to short term, getting that tech stack so it's no longer siloed. So there's interoperability. It's all built in the cloud. They can actually update rollouts. That was one of the issues in the past. PayPal would have these improvements that they say, hey, it has like a 3% conversion lift and it does this and that and all these great features. And it would take like 5 years to fully roll that out worldwide, which is ridiculous. It's because of the old way and the old system, the old tech stack that they built that on. So there's a cost to do this, but they'll actually, according to their investor date, towards the end of this year, not this year, towards the middle of next year, have most of that over onto that single tech stack as well. So a lot of good things happening there as well. Good question here by Juan. I do own Leaps, which are down a lot. That's a problem with Leaps. You're basically betting on price action improving in the future, even if you're selling deep in the money Leaps. Mine are 90 strike, and I have some 115s as well for December 2026 and January 2027. I think that they'll work out. I'm not interested in buying any more of those. What I might do, especially if the price is here or lower and things continue to be good for PayPal, in addition to buying shares, which I plan to do so on Monday, I'll probably wait until 2028 Leaps are out, which usually comes in September. Not really that far away. But I'd like to give myself as much time as possible. And I may take some of that off the table, just realize those losses and roll those into 2028 leaps just to give myself a little bit more time as well. Painful, but I've done that before with Palantir. Worked out quite well. Robinhood, I didn't need to. It just ran. But that's kind of the way it happened. That's what a lot of people think. PayPal will never go up. It feels like that. It really does. But yeah, I don't think that's the case. There's, I posted in jest yesterday. I'm like, PayPal might be the first wildly profitable company to go to zero, because it feels like that. Emotions are a real thing. But what they're actually building, like we've seen this with many companies. I mean, this isn't a meta situation. I don't want you to think, oh, this is going to go from $90 to $700. No, not the same company, not the same growth vectors, but it is still a compelling play, I think. But in essence, once the narrative shifts and the market realizes, hey, this company is not doomed, they're actually leaders in the future, then there's an appreciation in shareholder value. And so I think that we'll see that even as the underlying continues to improve. And there's a lot of improvements there as well. And this right here is key. Do your own research. If you're relying on me, for conviction in PayPal, don't do that. That's a risk. Why? Because I get things wrong. I'm not perfect. Timing I'm terrible at. So case in point, PayPal right now. Sometimes I'm early, sometimes I'm late. But if you are invested in a company, especially if it's a large position for you in long term, do your own due diligence. That way, when there's a big pullback, 5%, you don't get shook and sell your position. There's two guys that I know that exited their position entirely yesterday. And near as I can tell, it wasn't because they were worried about that specific news from JP Morgan Chase. They're just like, yeah, this stock is never going up. It's dead money. I'm out. That's the risk of emotions and not doing your own due diligence. And those guys may be right. Well, time will tell. Block is in the same boat as PayPal. The two tend to run in tandem. I think that there is a much higher quality in PayPal than Block. And a lot of that comes down to leadership and culture. But I think both should do well. I'm just only invested really in one. I've got like $100 in Block, less than 100 now. Appreciate that. Yeah, as far as what I'm studying, I've not released that to the public yet or where I work. I'm comfortable doing that next year when finished with the PhD. And I've been at my place, which is my dream job, for about 2 years. It's probably not what most people expect. It's not like a high lucrative tech field. It has nothing to do with investing. But it's something that I'm passionate about, that I really love, that helps a lot of people. So there we go. I just want to learn the basics and how they work, not asking for option advice on any stock. Yeah, there's a lot of good tools out there. In the Money is one that basically I learned. There's some dated videos from 2021, which are still just as good as they were before, which goes into those. I've not released too much. TJ, the Wheel Deal, if you're looking at wheeling, friend of mine, he's worth following and looking at. Maybe at some point I'll do some of those. Got to finish the PhD and have a little bit more time. As far as other news, so what I'm excited about over the next couple of quarters, Braintree headwind going away. That's going to be massive because, again, on the top line revenue growth, it looks like they're not growing at all, but instead things will be normalized here in a couple of quarters. Another one that I'm very excited about, which Alex Chris mentioned. Let me pull this up so you can see the announcement. It's actually really funny. Is what's happening in Germany. And, of course, I can't find it. 1 second. The nice thing about not being live for these is I can take time to find it and edit all this out. So this won't be edited, and I appreciate you guys. All right, so here it is. Now, nope, that's not it. Move. And share screen there. All right, perfect. Minor thing, just a couple of words, really big deal. Now, they mentioned this last quarter that they were doing this, but they rolled out and they launched PayPal Mobile Wallet with in-store tap to pay. A lot of that's the NFC that had to be opened up from Apple in Europe, but it's more than just that. And so you can do tap to pay, buy now, pay later in Germany. They crossed 1 million signups. That was right after the launch. Germany is the largest concentration as far as outside of the US of PayPal users and holders. They have a massive market share there. And previously, there was no real option to use PayPal in store. A little bit in cards, but honestly, it just wasn't present. And now they have 1 million signups, a massive amount of volume. If you look at App Store rankings, I mean, Germany's PayPal is always way up there, and even more so, especially after this too. So they're going to get a lot higher, I think, international revenue. They'll actually see some acceleration in that. Now, this rolled out in June, so that's only 1 month out of the 3 for this quarter. So you'll see an impact in Q2 earnings, and that'll be a bit of a surprise on the revenue side and also on the bottom line as far as transaction margin dollars. But really where it comes into play is Q3 as it relates to guidance and eventual earnings as well. So that'll be interesting as well. So beyond omnichannel, the couple other big pieces of news, and one quite literally big, Alex Chris announced that there was a Big 12 and Big 10 partnership. Let me pull up that. Actually, I'll just show you this. Well, let me pull up the full interview because actually the end of this interview is really exciting. And Alex usually doesn't these days talk like this about PayPal specifically. And I am striking out. I apologize, guys. Let me pull up this. So he went on ESPN, which is not usually where you see payment companies and stock companies be at. But the reason for that is Big 10 and Big 12 are massive college partnerships, college conferences that are bigger than the 10 and 12 that it implies. They've actually expanded those conferences quite a bit. I'm not going to be able to find it for whatever reason. But in essence, there's been a shift and change in the way that college athletes are handled. Now, this began to happen like 7 years ago where college athletes could actually accept external partnerships, but still the school benefited from all the revenue that the sports teams generated. And they could not share any of that with their athletes, although many did in clandestine means. And so the NCAA said, hey, let's clean this up. Let's bring it above board. And so for the first time, actually this year, athletes in these conferences are able to share up to, I think it's $20.1 million per college. And a lot of that's going towards football, some basketball and other sports as well, towards the individual athletes. PayPal sponsored with 2 of the largest conferences that are out there, the Big 10 and the Big 12, massive amount of students. I believe it's something like 700,000 students, not as many athletes, but there's a couple of pieces to this. So one is they're a preferred payments partner for the Big 10 and Big 12 as well, or actually one of those in particular with Venmo. They've rolled out for athletes that you'll actually get paid in your PayPal account or your Venmo account. That's your option. So you have to sign up and use it. It's going to drive some volume there. But they've also launched a lot of partnership agreements with these college campuses, which will, I think, see especially Venmo as the school year starts. And so look for this in August and September, those App Store rankings. You'll see a pretty interesting spike there. So here's the announcement itself. Big 10 and Big 12 enter historic partnerships with PayPal to enable institution payments for student athletes and new revenue sharing model. And I cannot find the interview, and I don't know why. But in essence, at the very end of the interview, Alex Chris was asked by guys at ESPN, they're like, do you see this as the model to use for all these other conferences? Or do you think that it's just going to be diversified? And Alex Chris is like, yeah, we're going after that. This is the best model that's out there. We're the preferred payments partner. We're going to do it right. So it wouldn't surprise me if there's going to be other conferences that are also taken there. Now, Venmo also, a lot of partnerships with it. PayPal, again, owns Venmo. This is just a look at what those cards look like. You're going to see a lot of college, not just athletes, but individual college students really begin to use Venmo more and more. And those are actually, if you're not in the United States, you may not understand this, but especially at this type of campus, especially if it's a sports school, there is a whole lot of campus pride. And so these are going to do very, very well for PayPal. And they're all debit. Note that. Debit cards, for whatever reason, among Generation Z are their preferred medium for payment. And so they're monetizing Venmo. This is a really good thing for PayPal. You're not going to actually see that hit, though, in terms of revenue until Q3, but maybe they'll bank that into guidance. Is it the most massive thing? No. But basically, there's so many things that PayPal is doing that's going to add, like, this will add 0.5%. This will add 1%. This will add 0.25%. And all those combined to some very nice growth vectors over the next 5 years. Let's take a look at the comments here. Yeah, more of a macro thing, but that could cause, we'll have to see. So I think the market believes in taco a little bit more than it did back in April. Trump always chickens out that it's a negotiating tactic, but it's not just EU, it's Mexico and Canada as well. But the EU piece specifically was announced after the markets closed, I think quite deliberately by President Trump. Europe had comments back on this and said, hey, yeah, we're going to push back against this too. But if the market is concerned, it wouldn't surprise me if we see a pullback on Monday. I actually had hedges and I sold them Thursday. And since that time, what I was positioned in absolutely tanked. I'm like, man, that's frustrating. And it wouldn't surprise me to see more downside as well. I don't think that we're going to see an April crash, but we're at all-time highs for a lot of tickers. This week we hit a new all-time high with the S&P 500 and NASDAQ, and pullbacks are pretty common. We could see a 5% pullback, which might hit PayPal a little bit more. I don't love that, but keep in mind the buybacks are working on the back end there too. Let's see. Need somewhere to invest my net new funds for my SoFi 22 covered calls. Might send some PayPal's way. That's another thing too, is if the market keeps going up, there's some, and it's not wrong to take profits at all, guys. So don't think that I'm pushing back on T Hutch there. You taking profits, congratulations. I'm up very big on SoFi. I've taken some profits on leaps in the past, and I will on my leaps only, not my shares in the future. But a lot of times people will be traders, or they'll have this massive gain. They'll want to take it off the table. And when everything else in the market is just ridden up pretty high, those laggards like PayPal, like Lululemon, like Peloton, somebody mentioned Peloton in the chat, they tend to get some capital, whether they deserve it or not. Some of those names, maybe they do. I think PayPal does, even if it's an opportunity cost for the short term, just because people look and they're like, do I really want to invest in these other tickers at all-time highs? They can keep going up, but a lot of times they look for value, and they find it either in very risky speculative companies, which could do well, or in companies that are more established, that are turnaround plays, like the airlines that we saw this week and like PayPal. So something to keep an eye on. I think that the market might give us a pullback, though, with the tariff news, but we'll have to see. Celsius, yeah, that's another one. Drinking it right now. I do swing trading occasionally. I'm not nearly as good at swing trading as I am long-term investing, because long-term investing, all you really have to do is buy quality companies and hold on to it for the long term. And if you're right and it continues to be a quality play, and you need to be abreast on the news, then you just hold that. It's easy. You don't have to time things, and my timing is not great. You kind of need that for trading, but yeah, nevertheless, long term, that's the way for me. Now, if you're a trader and you do it another way, that's great as well. Yeah, that's another consideration. That's unless you have a tiny account. I mean, I wouldn't be comfortable with that, even in my my favorite company, Palantir. Back in the day, I was 90% allocated in Palantir when it was trading in single digits, but it's certainly not that allocation anymore. I'm about 10% allocated in PayPal. That's where I'm comfortable with, unless it's an absolute unicorn of a company. Above 10%, if it runs because of stock price action, that's great. I'll add to swing sometimes tactically, but yeah, I'm absolutely glad to have a little bit of a therapy session for you guys as well. If JP Morgan intends on charging fintech for the data, then its customers should intend on charging JPM for capitalizing the data. I think customers will actually be pretty unhappy with what happens. We'll have to see. Not so much for PayPal itself. PayPal can afford that hit, but there's a lot of other smaller fintechs out there that just frankly can't. Like, it's going to change their entire model or just kill them. And it's not good for consumers. It's just not. Now, the old model, fair enough, was not really fair for banks, for them to maintain basically this whole infrastructure, have the data ready to be accessed, and you could access their API. The same company could 50 times a day for the same customer, which is ridiculous. There's no need to do that. And there is an expense to that. It's small, but it adds up with millions of customers over time. So there are models that finds a happy medium, but right now banks are greedy animals, and they're taking full advantage of this as well. So what price range am I looking at adding him? So this is mostly about PayPal, but I'll add some at 40, and I think that we'll probably get there. Basically, I exited a lot of my hymns just because I do think that there are short-term headwinds. I did that, I think, around $50, maybe a little bit higher than $50. I still have some hymns that I'm just not willing to give up at any price because I think long-term the company is positioned well. But there's basically certain legs down. 40 is the first one of those. 35, and I think 25 is when I fully add what my position once was, and actually probably some extra too, because I've had some other gainers. Yes, JPM hurts every single fintech, including Robinhood, actually even including SoFi. SoFi is a bank, but you can think of like SoFi Relay, you can think of Galileo as well. There are impacts towards SoFi as much as its position as a bank. When are you going to adopt Tanner so he can become an American citizen? I need to adopt him and Tevis as well so they can get out of Dodge and come down here. But I think that they're past the age where I can legally do that and get away with it. So, all right, a couple of other probably quick pieces of news. Let me pull these up. But they are pretty interesting as it relates to PayPal, and I think worth knowing as we're going into quarter two. Then we'll talk about what I'm expecting for earnings. Thank you, by the way, Barry, for the gift of those 20 memberships. I think those go out automatically, guys. So appreciate you. We did talk some PayPal in the SoFi after hours, which I'll be posting in the next day or two. We talked some PayPal and Nubank as well. And so that's for members only. That's the only thing I do for members only. Other than that, guys, just thank you for your support. I appreciate you guys. All right. So let me find these App Store rankings here. And I'm one of these guys, I can't really talk and type at the same time. So I don't know why, but for some reason, search is terrible on X. So, and I posted too much just to find it. There we go. Well, no, that's in November. All right. So this was unusual. So App Store, of course, is Apple Store. Thank you, Matt. Appreciate you, brother. Yeah, maybe you're green. I don't know. But usually PayPal in the App Store rankings, as it relates to finance, is one of the top three. Cash App is usually right there with number one. Sometimes it's PayPal. Sometimes it's not Chime, but Intuit owns them. Credit Karma. But overall App Store ranking, you usually don't see this. And this hasn't lasted. I think PayPal is back. Still higher than it typically is, but it's in the 30s right now, or at least it was last night. It was as high as 9 for the App Store ranking. This is overall in America. That's really not normal. I kind of detailed where it started climbing up and up and up. Number 15, number 22. I mean, these things got my attention, but number 9, like above Netflix, that's not a nothing burger. And I think it's a couple of things. The government trusts and uses PayPal quite a bit. And so there was some regulatory payouts from a large settlement, which were only available, and this happens actually quite frequently, either through check or through PayPal. That's your choices. But also at the same time, PayPal specifically, it came out with that Big 10 and Big 12 news. And so as those athletes show up, they show up a lot earlier than classes actually begin, especially for certain sports like football, which is massive. That's when those athletes would be downloading and installing and making sure that they're up to date on PayPal. So I think that both of those, maybe even the 20% off on Taco Bell, kind of a silly partnership there, but those are all factors. But seeing PayPal up that high, we're going to see another new all-time high in terms of active users for PayPal. That's a little bit more meaningful now since they have advertising and since they actually have a real flywheel of products that they're doing. It wasn't nearly that meaningful when they didn't have that flywheel and when everything just kind of competed with each other. Let's see, beyond App Store rankings, Fiserv launched their own stablecoin, but they also partnered with PayPal to use their stablecoin as well. Again, you're a stablecoin. PayPal has their stablecoin. They've not done as much as I hoped with it, but they've done some. They're not sitting still with it. They also partnered with dLocal to scale their international payments, especially in Latin America, which is good for dLocal, also good for PayPal. They partnered with XLM, that's Stellar. We'll see that launch probably in the next couple of months. I actually kind of expected it by now, so maybe even this month. And so they're scaling that out on another ecosystem. Actually, let me pull this up here. We'll look real quick at the stablecoin ecosystem and PayPal, and then we'll talk about the US dollar as it relates to Q2 and then guidance as well. So that is not, there we go. So this is DeFi Llama, good resource for you guys if you're looking at stablecoin specifically. You can see, by the way, this huge growth in stablecoin. I believe a lot of people are saying that they expect stablecoin economy to grow by about 8x over the next 5 years, which is insane growth. And they may be right. Like there's a lot of tailwinds behind stablecoin. The biggest beneficiary is the United States. So that's great if you're in the United States. You can see the list by market cap of stablecoins. PayPal is down here at number 10, but you have to keep in mind, I believe, let's see, World Liberty Finance. If you look at this, like 75% is on one wallet. So not really a real market cap. Athena is not really a similar, real project. First Digital is not as diversified as you'd think. And a lot of these like DAI and I believe Athena as well are really just for Web3 applications, not for world payments. So PayPal is, PayUSD rather, is absolutely tiny compared to Tether and USD coin. That doesn't mean, oh, it's tiny, so it's going to grow rapidly. It's tiny and small. Let me go back. There we go, PayUSD. So you can see it started on Ethereum. It's scaled into Solana. It's on several other chains, but these are not really massive players. And again, XLM is what they're being added to as well for those remittances mostly and real world payments. PayPal is really positioned well for this just because they have the ability to actually scale their PayUSD in real world payments, especially as it relates to cross-border. I would have expected them to have rolled that out by now, but they've been slow in it. There's probably things I don't understand. I'd love to ask some questions, and hopefully I'll get to here in the next month, next quarter or two. Now, the other piece as it relates to PayPal, this one's actually very significant for Q2 and also Q3 guidance because it's not the norm. And I've talked about this a number of times, so I'm probably repeating myself, but it's this. US dollar index. PayPal receives 40-something% of the revenue from international companies, or countries rather. A lot of that, again, is Germany, UK, cross-border with China. They launched something in Singapore as well, which is gaining some traction, but they're a worldwide entity. And so when you're positioned that way and you get a large chunk of your revenue, whether you're PayPal, whether you're Apple, whether you're Google, from all these international countries, they're paying in their local currency. Now, the challenge is if the United States dollar is up here, and by the way, 100 is neutral. This is a basket of currencies that trade against the US dollar. So you'd have to look at individual currencies like the real to really see the impact for something like a Nubank. But PayPal is pretty diversified. So if you look at it compared to other currencies, like they always report on dollar neutral terms. Basically, they're like, hey, if the dollar actually was around 100, which let's look at the last 5 years here. Well, we'll look at all. There's no 5 year. So you can see really since 2022, it's not been neutral. That at best, it'll fall briefly to neutral. And it's been incredible headwinds against other currencies, which you'd think strong dollar is a great thing. It's not for companies like PayPal. It's actually not for most US companies, and it's not for most consumers unless you're importing and buying a lot of stuff from international or traveling a lot. So if you're affluent, it's probably a little bearish to have a weak dollar. But if you're not as affluent, it's a good thing. It seems the opposite, I know. So what does this mean? Well, PayPal always reports in dollar neutral terms. So when they reported revenue, they're always like, well, we would have like 8% revenue growth, or in this case, it would have been 3% except for the lapping with the leap year and also international headwinds because of the strong US dollar. They do hedge against some of that. But when you see the dollar actually weaken, what that means is if it's just trading at parity, that dollar neutral is going to match very closely with what PayPal's actual revenue is. That's a pretty significant tailwind, especially going forward if there's some stability on that. And just it trading at parity here, which again, it's just below, that's a good thing. You wouldn't want to see this like weaken to this point. This is bad. It shows that there's something really wrong with the United States when it's trading that weak against international currencies. But a little bit of weakness goes a long way and really helps because some of those currency hedging that PayPal does, they will do less and less as there's some stability as it relates to the United States dollar trading, which basically just helps flow towards that bottom line and also the top line as well in terms of revenue. So this is one of those areas where if you look at analyst expectations, and I'll have a video a little bit closer to time in a post on X when it relates to Q2 earnings and my expectations. But analysts are not banking on this. They're not baking this in at all. Again, I'm only expecting a 3% year-over-year revenue growth because they have that minus 5% from Braintree. Could they be a little bit higher? Yeah, but that's not, whatever it is, it's not going to excite the market. The guidance might, the bottom line stuff might as well. And so that's, let me look at a couple of questions and then we'll talk about guidance and Q2 a little bit more specifically. PayPal, yes. Yeah, DCF models can be useful. I don't use them much. I do look at them occasionally, what other people are saying. Will the market makers let them get there? It's not really the market makers. This isn't manipulation. This is just people saying, hey, there's nothing compelling about PayPal. I'm going to invest in some other things. Short term, again, that narrative drives PayPal. And we looked at, if you missed it at the beginning of the show, everything bearish that happened over the last 3 months. And there's some legitimate bearish things. What's my 2, 3, 5 year price target? I don't have one for 2 years or 3 years. 5 years, we're looking at an all-time high. I think. Let me actually pull that up. Actually, let me pull up two things here. This will sound crazy until you see this other data point. And there it is. Okay. So first, all-time highs are going to be a lot easier to reach now than where they were trading at. I believe it's 2021 where they hit their all-time high. Share count was up to 1.174 billion, and they started a buyback program. It wasn't very effective back then just because the shares were very elevated in price. Right now, free cash flow yield, or not free cash flow yield, buyback yield less their stock-based compensation is around 7 or 8%. So they're buying back 7 or 8% of their float each year. And you can see, like here, they're under 1 billion shares. So they're basically about 20% lower from their peak than where they were today. So that helps them in terms of their market cap. So if we look at PayPal over 5, well, let me remove there. So this is a chart that no PayPal shareholder, especially back in the day, really loves. It's trading in the 300s. So 70 to 300, that's a 4.5x, not quite a 5x. I could see, a 4 to 5x by 2030. And again, getting here is 20% easier. It'd actually be a little bit easier too, because they'll continue to buy back shares through there, up to 80% of their free cash flow yield. I think they'll probably have a dividend in about 2 years as well, which will get some excitement for some shareholders. I won't mind it. I own a lot of shares. But it's going to be maybe like 25 to 30% easier to get to this peak than it was previously, simply because there are far fewer shares in issuance. So right now, I'm very much appreciating that they're buying back stock, because long-term, as things do get better for PayPal, I think that this will not be the high for the year, by the way. Well, it was in January, but in the 90s. That's not a bad return. Now, if people are like, oh man, only a 4x in 5 years, that's terrible. It's just a sign we're in a bull market. For me, this is probably not going to be my best performer over 5 years. It's been my worst this year. But it like, again, the way I look at PayPal is the margin of safety is there. Like, do you realistically see PayPal just completely going away and going downhill and going the route of Western Union? I don't think so. I mean, that can always happen, but everything that I'm looking at that points to is the opposite. Western Union, now they're in a pinch. They're trading at a 3 price to earnings. That's ridiculously cheap. They have a dividend yield of 11.2%. But the problem is their business is basically all international remittances. And there are so many competitors. And this is an area where stablecoin really, really impacts them as well. And so there's a reason why they're priced to that value versus where PayPal is at. They do have a company, Zoom, that does international remittances. It's one of the problems that Western Union has. So Could PayPal be the next Western Union and just eventually, like, I don't know if this will go to zero, but it's pretty bearish even at that cheap for Western Union. I don't think so. I think that there's less than a 1% chance, at least while Alex Chris is at the helm. You can see that they're like, just think about it this way. If you think PayPal doesn't innovate, that they're behind on everything, this again is a year of stablecoin. What was the first payment company to issue a stablecoin? It's PayPal. When? August 2023, actually, before Alex Chris came in. That's part of the problem with what they've done with the stablecoin is Alex Chris came in and probably realized like there's no real plan with the stablecoin, but there are a lot of other pressing things to put out, fires to put out. So, but yeah, they're well ahead of the curve there. They're positioned very well with where they're at right now. And then the other factor too, the AI agent stuff. Now, there's a lot more that PayPal is doing, but AI agents specifically, they're the first payment company to actually launch their Model Context Protocol remit server. Massive partnership with Anthropic, Perplexity as well. Their whole last developer day was focused on this. They understand where payments are going in the future, that they need to be more than just a payments company. They're positioned well to benefit from that massive user database that they have that they frankly hardly used in the past at all. So it's hard for me to see and realistically say, oh yeah, if they're going the route of Western Union, like a lot of people think, I don't know what they're thinking. There's competition. Yeah, stablecoin is a thing. It's important. But yeah, nevertheless. Can you ask Amit that he needs to get a copy of Christopher Walken asking for more cowbell when he rings his bell? Fun little Easter egg for you guys. If you're a Tesla owner, I don't know how you do it if you don't have the stocks. But if you have the stock and you engage autopilot or full self-driving, hit that stock down 5 times in a row. Now, make sure you're in a safe place where you do this, but it will play this soundtrack and change your autopilot into Rainbow Road. I found that, and that's been around a while. That's a known Easter egg. We didn't know about this until our trip over to Arizona this last Christmas. I did it by accident. I'm like, what is going on? Why is this SNL kit playing over my radio? So why PayPal when Google looks cheap? Google, I think, really is being disrupted on the search side. 53% of the revenue comes from search. I've talked about it elsewhere. I don't think I will go into it too much here. I know people look at revenue only for search, and I think that's a big mistake because all what Google is doing is basically charging more for the same product. You can do that for a while, especially when you have a bit of a monopoly, but there's a lot of diversification happening in advertising right now. And if you look at search engine optimization guys, if you look at advertising guys and advertising firms that work with Google search and AdWords and that sort of thing, they are incredibly concerned and unhappy and frustrated with Google. And when you continue to tick off those kind of people and they say, oh man, like one direct quote that I saw, well, I'm going to mess it up, but in essence, they were like, used to be that you'd have all these data and insights and you could leverage that, to actually improve your position. Right now, it just felt like playing roulette. Like you just hope it works out. You place your bets and you don't know. Just because Google is hiding a lot of data and there's a lot deteriorating that model. Basically, the entire model that the internet was built on in the last 20 years, which Google thrived on, is shifting dramatically. And a lot of that is because of LLMs and agents. PayPal is positioned well there. Google is not dead in that scenario, but half of their business is being disrupted, I think, more quickly than they can monetize that other half. Long-term, Google is positioned well. And if we get a weird drawdown, so not in April where everything fell together, but let's say Google fell like that and a lot of other companies didn't, I would be a Google shareholder at that point because I love the other half of what they're building. Search is deteriorating more than a lot of bulls give it credit for. Covered calls. Yep. There is tax liability for sure. You got to know tax stuff too. So there's benefits, there's drawdowns as well. PayPal is undervalued. I think relative to Google, yes, that's why I'm buying PayPal. I think in essence, so if I believe, and if you believe with me that PayPal will do a 4.5x over the next 5 years, do you think Google will? No. I mean, I don't know that the most wild Google bull thinks the same. Now, there's a margin of safety there, but I think Google will actually go down more before it really goes up a lot, just because of the deterioration of that search model. Probably in the next few quarters, people will realize that are just only focused on revenue. They'll begin to see the cracks, because Google themselves, they see it. Some of the things they said in that DOJ hearing with Apple, some of the things that they've hidden deliberately from those using AdWords, some of the things that the language that they use, like when Apple's saying, hey, that we're actually down on using Google and Safari, they're like, yeah, but over the ecosystem, you're up. They know, and they've even said this, that search is essentially over time going to die the way it is. That's why they have to focus so much on Gemini, and they're doing a good job, but it's going to take a while. Google grows faster for now. Yeah. As search is disrupted, I don't think that's going to be the case for a little while. But they're going to be okay. I'm not saying Google is terrible. They're going to outperform the S&P 500. I'd much rather. What I really don't understand is people that are attracted to Apple. If you're attracted to Apple because you're like, I love free cash flow and I love buybacks, you got PayPal. Do that. If you love Apple because of the ecosystem and the ecosystem argument, and you think it's going places in the future, go after Google. I mean, they're innovating. They're doing very well with everything except for search, which is not their own fault. It's one of the reasons why I think they were slow in LLMs, is they didn't want to disrupt themselves. Yeah, Frank Keller, he is the guy that has survived Dan Schulman and also Alex Chris. He's a guy that has remained there, and he's just an incredible mind, a sharp guy. Yeah, and it's actually very exciting that he's doing this, because they're not just seeing and treating PayUSD as they would a typical project under Dan Schulman, where they're like, hey, we built this. We hope it works out. Good luck to you. They're looking to integrate that across their entire ecosystem, not as deeply as what Robinhood is doing, and as far as the Robinhood chain and putting it all in chain, but it's not useless. We need a pullback. Well, we're getting that in PayPal right now. Even at 19 forward price to earnings, re-rating PayPal will be at 95. And keep in mind those estimates, the forward price to earnings, those are analyst estimates that, frankly, I think are pretty bearish and and a lot of that is, I don't know. A lot of analysts do understand PayPal, but what happens is when you've been focused on a company for a long time as an analyst, you tend to pay a little bit less close attention. Now, there are some that have followed PayPal a long time that are great followers, and they understand what's happening here. But there's a lot that are just not realizing things, like they missed, for instance, back in Q1 of last year, that PayPal shifted the way that they reported their GAAP versus non-GAAP earnings. And it's like, guys, I mean, like, that's pretty basic. They've been talking about that for a long time. They're missing here that Braintree strategy. Now, not all of them, but it is some. And a lot of them just don't update numbers. They have a lot they have to cover. Use FinChat. Oh, we right. I don't have that. So Tom Lee is amazing. He is the GOAT. I like that he's doing the Ethereum ETF. I think that he's right in terms of Ethereum being undervalued, by the way, simply because a lot of that stablecoin, if you go back to DeFi Llama, is built on and built around the Ethereum rails. Stablecoin to work, it has to run on a level 1 in some cases, or usually level 2 blockchain. So that's Ethereum, that's Solana, Tron as well, but and there's some others, but yeah, he's probably right. Like, he's usually right. Sometimes gets things wrong. For instance, the Russell being an outsized mover over the last year, it hasn't been the case. Been looking to increase PayPal exposure. Leaps would make this most sense there. Only with Leaps, only risk what you're willing to lose. If you want to be super conservative, you can write deep in the money Leaps, which I know seems counterintuitive, but in essence, it's a form of margin. You can look at the exposure and the amount of PayPal that you buy. If you're looking at 90 to 95 delta, in essence, every dollar that PayPal moves up, you're getting 90 to 95% of that. What that means is basically, if you buy that deep in the money Leap, you have a larger measure of safety if the stock price falls, and yet you'll still outperform if you bought shares on a 1-for-1 basis. Now, the challenge is, if something happens like that big April pullback and everything falls, and PayPal actually fell back into the 50s, which is just shocking, you're going to be in a lot of pain. So there's still some risk there. I do own Leaps. I'm happy to own some Leaps, but shares are a lot safer than Leaps, just saying. Personally like his info and thinking about doubling down on Ethereum. Yeah, I actually got out of Ethereum completely maybe a year ago and just put all of that. I actually got out of ADA too, a little bit more recently, and put all that into Bitcoin when it was at 70K or so, 60 or 70K. And it's done well. Like I saw a lot of the layer twos as not being as compelling as Bitcoin, specifically because stablecoin really replaces a lot of the utility, which a Cardano, that's the reason why it existed. I'm like, well, stablecoin can do that, and it doesn't need Cardano as far as a chain. That there's other chains that are other options. So yeah, Ethereum though, I own some. I don't own nearly as much as Bitcoin, but those are the only two cryptos I own, other than just like little tiny amounts here and there. They can buy 9% of the total float, yes, but there's also stock-based compensation around 2%. So in net, it's better to think about it as a 7% buyback yield overall. So just be cautious there. 104 re-rated with buybacks, great. Would love to see that. In 10-year outlook, I think Google is great. Yeah, I agree. I absolutely agree. I just, over the next like 2 or 3 years, I just think that there's some big headwinds against search. And the way the market works is whenever there's good news, especially in a bull market, it just goes crazy. Usually more than is what is deserved for that stock and that ticker. I mean, HIMS is one of those things, a very volatile stock. And there's been some really good news for HIMS in the past, and also a short squeeze too, which helped. And it went to 75. I'm like, okay, I took profits well before it got to 75. And then I bought some of that back as it fell, and then it went up again and I sold some. Google, same way. If search is being disrupted, and there's evidence that it is, and more people realize it, the market, I think, will overreact to that. Like, you might think that Google is trading at a stupid valuation, and it only really is compared to its Mag 7 peers. Like it's cheap compared to them, frankly. It is. But otherwise, there's room for Google to fall. And if it falls to a stupid level, which it might, I will be glad to become a shareholder, because I agree. Over the next 10 years, Google is positioned incredibly well with like the other half of that company, what they're doing. There's been a huge turnaround. I'm not saying everything's perfect at Google, but you look at almost everything except for search over the last year, a lot of improvement there. When will I take profit on PayPal? That's the point of Leaps. When I view a stock as incredibly undervalued and I buy Leaps, by the way, the only ones other than some swing positions that I have Leaps on is Nubank and PayPal right now. No, that's not right. I've got SoFi as well. So let me use SoFi as an example because it ran a lot recently. I've taken some profits in the past. I'm not on this run yet. I think that there's more upside before the end of the year. Could be a pullback, could be a mistake. We'll see. But I have shares. I don't plan to sell the shares. I will if I need the money for something. We just bought a Tesla. We sold some shares out of Palantir mostly. Some out of not shares out of Robinhood, but actually some vertical spreads and a couple other positions as well that I trimmed a little bit. But usually with shares, I just hold those. If the company is executing at a high level, they continue to grow well and do well, unless I need the money or I find something where I'm like, I need the money for this play and it's just so compelling, I need to buy more, I don't have a reason to sell. I especially like to make sure that my shares are there for at least a year. A lot of my PayPal shares are in the non-tax advantaged accounts. So there are tax implications. Some are positioned in tax advantage account, like 30% or so. So I don't plan to on shares, but on Leaps, yeah. If and when we get a double on my Leaps position, I have a lot more Leaps than I probably should have bought. And they're down right now. I'll take some profits as we go up at certain intervals and certain legs. But shares, I have no reason to. In fact, I think that I'm not a dividend guy. I guess I own NVIDIA, so I am, but not a real dividend. But I do think in about 2 years, there will be a dividend from PayPal. So at that point, between selling covered calls and making my own dividend and also what they pay, I don't know. I don't mind holding PayPal shares for a long time. I think they're positioned well over the next 5 years. Now, if something changes in the thesis, Alex Chris no longer is there at PayPal, or I see them going in a completely wrong direction as a company, or like they say, oh, Braintree headwinds are going away. In Q4, we're seeing like 1 or 2% year-over-year revenue growth. There's a big problem. And I will, instead of taking a profit, I'll take losses. If the thesis changes, I'm willing to change my position accordingly. So, I mean, I like a super concentrated portfolio. it's not a bad investment. So yeah, thank you guys for being here. Just about to wrap up. Jesse Dow got wrecked on doing leaps on PayPal. Now, the issue with what Jesse's strategy is, and this is no shade to him, it's worked out some in the past, is he tends to take the highest possible leap. So he does give himself some time, but he was eyeing PayPal at like 140 or 170 or something ridiculous. And I was looking at that like, I don't know that PayPal even gets there. Now, it doesn't have to for leaps, but I prefer, again, to either have it close to the money or even in the money. SoFi, for instance, I added more when SoFi was like $12. I bought some in the money, $10 strikes for January 2027. So, like, is there risk that SoFi will not be $10 by January 2027 when it's trading at 12? I looked at that. I'm like, I mean, it's pretty low risk. And it had to get to like 1450 or something to actually pay off. But I'm like, it's very unlikely that those would miss. So I gave myself a large margin of safety. Now, if I was more risky, I could have bought instead a lot more $25 strikes or $30 strikes and made a ton more money. But the risk is exactly what happened here with Jesse Dow, where you put it out too aggressively and the stock does not run. And PayPal is not going to run like a SoFi. It's several reasons for that. I think there will be some very strong days in the future. But yeah, you just burn theta and it's tough. PayPal has the potential to be the next AZO, O'Reilly, and NVR. O'Reilly really is a good thing to look at there too. I think that they're actually positioned better than that. I'm not as familiar with. I actually don't know what NVR is, but these companies have done a lot of buybacks, and basically, there's a magic with buybacks that the more that you do, the more that it compounds. Now, if buybacks is the only thing you're doing as a company, if that was a thesis with PayPal, I would be out. There's more compelling. Like I'd be a Western Union guy, I guess, at that point. But once you cannibalize a pretty large swath of your stock, I mean, it just compounds again and again, especially if it remains at a discounted rate. You can manufacture a lot of EPS growth. Apple has done that. The problem with Apple is they've really not done much in the terms of innovation. Now they've got a large ecosystem. They're going to be around a long time. They're not in growth mode anymore. PayPal really does need to reaccelerate their growth mode. And I think that they will. I think that there's indications that it will. PayPal doesn't move like it. Yeah, it's PayPal. Thank you for being here, Amit. Anyway, guys, I'm going to wrap on that. Other than just saying, just to recap, it's been a painful hold. It has. It's been an opportunity cost. I've been wrong as far as the quality of the company. When I went in, things were a bigger mess than I expected. Same with my brother, Alex Chris. And yeah, I'm leaving because Amit's here. That's right. When a real streamer gets here, I'm like, all right, I'm out. But what they're actually building in the company, like, take a look. I just showed some of the news. There's a whole lot of other stuff here. Look at the Postman API comments. You can look at for instance, more at the Fiserv project that they talked about. Recurring payments, the way to get around the App Store payments and Apple. Like, there's a lot of like little things that are out there too that we didn't even have time to cover. Is everything great at PayPal? No, there's some bearish stuff. We covered that at the beginning. But take a look at what the company is doing. If you're like, hey, this isn't it, and they're being disrupted, there is nothing wrong with taking a loss and going into something that you find more compelling. If you take a look at what PayPal is building, you're saying, hey, they're undervalued. What they're building is going to be special, and you have long-term horizons. Position yourself accordingly. Do your own due diligence. Quarter two, I think, will surprise. But again, just to recap, I think I may be wrong, but I think the market is looking at that top-line revenue growth. It's going to be 3% for PayPal, 5 or 6% in quarter three, and 8 to 10% in quarter four, which is where maybe the market gets pretty excited at that point, especially with the next year guidance. So there may be an opportunity cost even more so over the next couple of quarters, but we don't know. Sometimes things can change rapidly and more rapidly than we expect. I'm not trying to time it. I'm just happy to buy shares and hold them, even as painful as it and frustrating as it has been. Last one, how do you manage to do this? Plus jobs, plus kids, and study for a PhD. I got an 8-month-old and studying for Kaya. It ain't easy. Color me impressed. Yeah, my life isn't always this way, but in essence, this is what I do for entertainment and free time. I'll do things with the family, but like, people say, hey, what shows or movies have you watched? Like, I don't watch TV. Very rarely I'll watch a movie with my family, but only with my family. I just don't have time. I used to love playing video games. I don't have time for that. I have less time than I should for the gym. The gym is actually pretty important. I need to get there today, although I'm actually swimming with my daughter today. So, but it's, and also I probably don't get enough sleep. So finding balance, making sure you prioritize what is correct. That 8-month-old, I made a mistake when I had my kids, my youngest two, or my oldest two boys, where I was focused on going to school for my master's full time and working full time. And I wasn't around as much as I needed to be for my wife and for my boys. And I regret that. It caused some pain for them. And I realized, you know what? I need to slow this down. The goal isn't, it's not a sprint. It's a marathon. I've always had that mindset. This is my 5th year with the PhD? Looking to wrap it up in the fall. It may be that just because of timing of things that I defend in January, whatever, we're close. I've got a chapter and a half left to write in my PhD dissertation. So, but have balance, get rest. Yeah. I'm working on that, Chris. Message me if you have a suggestion for that specifically. I did order a camera on Amazon Prime, so I'm looking to do that. Better camera and lighting. Camera I'm working on. Lighting, I don't know. The mic I have the HyperX, but I think what I really need is a mic boom, and probably a little bit more soundproofing. So it's probably time to upgrade some of those things. So I'm going to leave it at that, though. As always, thank you guys for watching, commenting, and subscribing. And until next time, happy investing.